Hey everyone, it's Ruby here, and today we're tackling some seriously interesting moves in the mortgage world. Leo, have you seen the latest numbers from the MBA? I mean, the composite index barely budged, just down 0.5%, so really not much drama, but if you dig a bit deeper, there's some subtle action going on.
Yeah, absolutely, Ruby. It's funny because on the surface, it's like nothing to report, right? But then you see purchase activity actually up 2% for the week. And that's the strongest it's been in, over a month? I remember weeks like this back in 2015. You'd have all these flat numbers and people think the market's asleep, and then boom, a surge hits out of nowhere. It's usually a sign there's pent-up demand building, just waiting for the right trigger.
Exactly. I love when the headlines make it sound boring, but the details are kind of spicy. Joel Kahn over at MBA said something interesting. Borrowers are shifting their behavior even when rates nudge just a little. Like the 30-year fixed inched up to 6.69%. It's not monumental, but apparently enough for some folks to hold off on refinancing for now, even while buyers are sticking around. And that average loan size, $433,400, that's the highest in 2 months. Wild, right?
That's a good observation. And this kind of slow burn activity with a quiet surface but currents underneath, it's classic. A week like this looks quiet in the data, but it could lead into something bigger if rates move or inventory shifts. Actually, it reminds me, sometimes these slow weeks are when the smart investors start getting their ducks in a row. Let's dive a bit deeper on the refi front. Refinance index was down 4% week over week, which could look like, a bit of a setback. But here's the thing. It's still 19% above last year. That says to me, despite these minor dips, people are still interested in refinancing, especially when rates settle low. Sometimes a little pause like this is just folks waiting for the next rate drop before they pounce.
Totally. And did you notice the purchase activity year over year? It's up 25%. I had a mate who basically played the waiting game with rates this year. She held out, managed to time her refi just as the rates dipped, and now she's saving a bunch each month. It's kind of proof that if you're watching these week-to-week trends, there are windows where it pays off to act quickly, but sometimes you just have to be a bit patient as well.
Yeah, that's a real point. Inventory is slowly getting better. Prices aren't rising as fast, so affordability is easing a bit. For buyers, that combo is encouraging. It's not suddenly a bargain market, don't get me wrong, but compared to a year ago, it's less intimidating. I mean, people need to buy homes. Life doesn't pause for rates, right?
No, life definitely doesn't pause. And affordability, it was such a hot topic a few episodes ago, especially when we compared the rent versus buy decision and how small rate changes shift that equation for a lot of people. The slowdown in price growth right now is actually helping folks get back into the market rather than just sitting on the sidelines.
Right. And it's not just buyers who benefit. When people see those lower price increases and better inventory, it brings more stability overall. I think this is a sign we're headed for a more balanced market. Still competitive, but not as crazy as last spring or summer.
Let's break down where rates are right now because honestly the numbers are pretty fascinating. The 30-year fixed is at 6.69%, 15 years at 6.03%, and jumbo 30-year loans are sitting at 6.67%. FHA rates actually dipped a bit to 6.35%, while the 5-1 ARM dropped to 5.94%. So a bit of a spread depending on what you're looking for, but still, rates are hovering around new lows for this year.
Yeah, and that's the kicker. If rates stay here, I wouldn't be surprised if we see a spike in refi applications next week. All those borrowers who hesitated when rates ticked up just a hair might jump back in now. It's that cat and mouse thing. Wait for the drop, then leap in.
It makes the timing tough, right? Like, do you try to anticipate the next move or just grab the deal when you can? especially for investors or even first-time buyers? Do they jump now or wait and hope for a miracle drop? I get nervous just thinking about trying to time all that perfectly. Maybe the lesson is to keep your eye on personal goals, not just the numbers.
I hear you. The perfect timing thing. Yeah, it hardly ever happens in real life. Investors sometimes need to move quick, sure, but ultimately the fundamentals matter too. If you find something that fits your plan, affordability, location, financing, then waiting for some magic rate shift could mean missing the boat. And for first-time buyers who can qualify now, it might be worth just stepping in and getting started rather than waiting for another half-point dip.
I reckon that's the best takeaway. Stay informed, but don't let timing stress you out. That's it from us today. We'll be back soon to cover more market twists and turns, hopefully with even juicier numbers, right, Leo?
Definitely, Ruby. Always something new to watch. Thanks for tuning in, everyone. Take care.
Catch you next time, Leo. And to all our listeners, cheers and see you on the next episode.